Hello traders. The lines you see on the screen are, as you may predict, the lines of Bollinger Bands. However, I will guide you to a path of simplicity and low-stress earnings using these lines, which you may not anticipate. The Bollinger Band indicator helps the investor to buy and sell effectively by dynamically determining the levels where the price will rise and fall as support and resistance lines, as I have drawn on the screen as a representation. Of course, it cannot predict the future like any other indicator. Successful trading is always possible with the trader's own training, experience, discipline and psychological control. Now let's optimize two separate Bollinger Band indicators, where we will change only the standard deviation settings, and integrate them into our chart. You will be surprised to witness in the later parts of the video how big an advantage this small difference we will make will give us in terms of earnings. But remember, success can never be achieved without price action. For this reason, Bollinger Bands alone will not be enough to help. Here in our first example, I first marked an imbalance zone created by the price movement. Imbalance zones are gaps called fair value gap or liquidity void, which occur when the price suddenly rises or falls due to gaps in the order book of the exchanges. Traders who are new to the markets are influenced by these sharp movements and think that they have missed the opportunity, and when the market maker turns the price towards this unstable region, the novice traders become liquid in their transactions. We, together with our subscribers who followed our previous videos, do not fall into these traps anymore. If you are new to our channel, I highly recommend you to take a look at our previous videos. Now let's make our analysis by zooming in on the graphic image a little. As you can see on the screen, after the price rises upwards, the candlestick closes between both Bollinger Band lines. We also identified an imbalance region that we see right in the middle. If we see that the volume indicator starts to rise and we see a structure in the form of a reversal formation on the candlesticks, it will be enough for us to enter into a short position transaction. It might make sense to set our first target stop as filling the imbalance zone. At the same time, when we zoom in a little, we see that the price has formed a horizontal consolidation zone with candlesticks of equal size, and the black candlestick right there is violating this zone downwards. Thus, it would be logical to enter into a short position transaction with both the closing between the Bollinger Bands and the downward break of the formed horizontal zone. And after the level at which the transaction was entered, the price moved to cover the entire depth of the region we marked as imbalance and achieved our first target. The distance between the lower two lines of the Bollinger Bands can also be determined as a final target level. Since Bollinger Lines move dynamically, you cannot place the second target I mentioned in a fixed manner. For this, it is a good option to take advantage of the alarm feature of the TradingView application. If we can achieve the second target in this example, we can close our process ourselves after the alarm sends a notification. In this example, I show you how to set an alarm. In the alarm example you see here, it corresponds to the time range of the trading pair you are trading. It will also alert you if the price falls below the lower line of the Bollinger Band by 2 standard deviations one time. Of course, if you want to increase the profit, risk return a little more according to your risk management, you can also open the frame here and use the violation of Bollinger Bands, which uses 3 standard deviation settings and is seen as the top-bottom line on the chart. As a result of the progress of the price flow, the candlestick located here, which leaves a gap and hangs below the Bollinger Lines, will notify you as soon as the candlestick touches the lines. In this case, you must close your transaction manually. And now let's trade long positions by applying a different tactic. Thus, we have 2 different strategies using double Bollinger Band lines. We see a high bull market volume column where the volume indicator crosses the moving average line above it upwards, and we also see the engulfing candlestick formation structure that forms as the most recently formed candlestick engulfs the body of the previous black candlestick. An image where the conditions are met for us to enter into the transaction. Due to the wicks at the bottom of the candlesticks, which are formed in a very symmetrical manner, we can place our stop-loss order slightly below these wicks in order to take low risk. This will be the most accurate setup for our transaction projection. Please remember, regardless of your strategy, trader judgment is one of the most important elements. Ultimately, the decisions you make will shape the transaction, and as a result, you will make a successful or unsuccessful transaction. The only thing to be careful about is balancing minimum risk and maximum profit. And although all the criteria were met, our transaction was closed right here when our stop-loss order was activated. However, since we keep our risk-reward balance under control, we wait for the new opportunity with discipline. We never take hasty action due to the psychology of loss. And now we have seen an engulfing candlestick formation structure consisting of 5 parts. The effort of the buyer group to push the price up, even if it is weak, draws attention. There is an effort to neutralize the effect of the large black body candlestick. A long position can be entered at the closing level of the last candlestick that crossed the area upwards, but here the HUJA indicator still does not show any column that would indicate high buying pressure. We can call this image a classic aggressive scalper entrance. Of course, there are many experienced traders who use this method and make very short-term trades. Frankly, I am this type of trader, but in order to become a trader at this level, I recommend that you open confirmed transactions for a long time and gain experience during this time. After advancing the price flow a little further, a candlestick with a large body was formed, with the volume indicator confirming the high volume. The most suitable trading entry environment for us will be the closing level of this candlestick. Now that we have determined the point at which we will enter the transaction, let's create the difference we will apply this time and draw a rising trend line from the lowest level to touch the lower parts of the candlesticks. The absolute exit rule for our transaction will be if the price crosses the trend line we have drawn downwards and closes the candlestick. Yes, the trend line has broken downwards at this point and we need to close the trade once and for all. So, will we constantly check the screen to see if the trend line has been violated during the day? Of course no. For this, a single alarm from the TradingView application will be enough for us. Since I gave an example of a long position, it will be sufficient to set an alarm as shown on the screen in order to be notified in case the rising trend line breaks downwards and the candlestick closes. Here we see that a significant decline continues in the scenario that occurs in the continuation of the price flow. Dear friends, I try to show 2 different and very simple tactics with double Bollinger Bands. If you have any questions, please do not forget to write in the comment section. If you don't have a question, even leaving a small emoji there is important for the development of my channel. Please don't forget to subscribe and press the like button. Thank you. See you again. Goodbye.